my model is, if you look at the cost of owning a house holistically, is a high performance home better? And in most cases, I can tell you with all confidence it is. But a lot of people look at first cost and they say, oh, wait a minute, this house costs $10,000 more than house B over here, which is, code built. And they're missing the big picture. My whole point was I don't want to be the right person in the room. I want to be the one that has the most information, so people can make the right decision.
Hello, this is Izumi Tanaka with Home Green Homes Podcast, where I get to have conversation on anything about green homes. Well, this is not the first time I have had a mortgage broker on my podcast. My guest today brings an exciting holistic way of thinking about home mortgage loans. Kerry Langley is a long-time industry leader in the field of mortgage lending and founder and CEO of Home Bucks. He was someone who helped me in a challenging moment when negotiating with buyers for my recent listing of a certified green home with an attractive proposition for lower interest rates. He explains how he created a platform to come up with mortgage programs that would fit the buyer's needs, including energy efficiency issues. Here's my conversation with Kerry. Thank you so much, Kerry, for taking your time today. I'm so excited to have you. We've been talking for quite some time. So,
Right.
First of all, tell me who you are and tell me your background.
Okay.
How'd you find yourself in this space of mortgage?
That's a great question. I was born and raised in Atlanta, Georgia. I'm 4 generations from Atlanta, Georgia, so I am a hardcore Southerner. Um, and and at an early age, I really liked math. So I am in this space on purpose. My finance, my formal education, I had a double major of finance and real estate. So like I said, this is what I'm supposed to be doing. I didn't, sell cars and then sell Rolex watches and say, I think I'll sell mortgages. Not that there's anything wrong with selling cars or Rolex watches. It's just, I was meant to do this.
Yeah.
And for the first 24 years, I've been lending money for 38 years. For the first 24 years of my career, I was primarily focused on lending money to custom home buyers. I did, prior to the big meltdown in 2008, I was the top custom home lender in the United States for a little bank that disappeared named Wachovia. I think Wachovia was number 8 or number 9, doesn't matter. They were a big bank, and they disappeared. And the remnants were purchased by Wells Fargo. I went to work for Wells Fargo for 6 months. That wasn't a really good fit for me. But what happened in the big meltdown is the high end piece of the market disintegrated. And so in March of 2008, I was introduced to the concept of a high performance home. I didn't know what a high performance home was. I couldn't spell the word green. I could tell you what Brazilian cherry hardwood floors should cost for a 10,000 square foot house. But I couldn't tell you, I didn't care what an air conditioner was. I mean, everybody had an air conditioner. I didn't care. I thought every house had the same insulation. I thought if you wanted to save money on your energy bill, you put solar panels in. That's what I thought, right? And that I was perfectly happy being ignorant. And somebody came up to me at a meeting at the Atlanta Home Builders Association and asked me, I had kind of a reputation of being innovative when it came to the financing space, and asked me to develop a green mortgage. And I said, what the heck is a green mortgage? And they said, oh, these houses are built better, and because they save energy, people should get a lower interest rate. And I said, I don't know what you're smoking, dude, but that ain't going to cut it. At that time in the world, the mortgage industry was trying to keep the lights on. We were all dying. And I said, nobody's going to get a discounted interest rate on anything. But of course, I asked the people at Wells Fargo, hey, how'd you like to play in this space? And they said, what kind of nut are you? And I said, I don't know. But Anyway, but long and short of it is the people at this organization, which was called South Face Institute, which is the energy efficient people that I was first introduced this with. They were very persistent, and I went to 2 or 3 home builder trainings. Um, and in one of the trainings, I learned what made a high performance home a high performance home.
Mm-hmm.
And that was not solar panels or windows or HVAC or insulation. It was a combination of those. It wasn't
Mm-hmm.
specifically one 10 out of 10 and a whole bunch of twos. It was a whole bunch of eights. Um,
Mm.
and maybe a 10 if you're going to build passive houses or something. But
Right.
I learned that if you put them all together and treated them as a system, one system, you got a better result.
Right.
And so I used to journal in a leather bound book. I have about 50 of them for my career of my whole years. And I put in this little book, why can't I do the same thing with the financial side? And
Mm.
so I started writing a piece of software that has evolved into HomeBucks. It's based on the total cost of ownership, which I call TCO. My model is not let's buy something super expensive. My model is if you look at the cost of owning a house holistically, is a high performance home better?
Mm-hmm.
And in most cases, I can tell you with all confidence it is.
Yeah.
Um, but a lot of people look at first cost and they say, oh, wait a minute, this house costs $10,000 more than house B over here, which is, code built. Um, and they're missing the big picture. And so
Yeah.
my whole point was I don't want to be the right person in the room. I want to be the one that has the most information so people can make the right decision. And
Yeah.
it really works. And so,
Mm-hmm.
so this little piece of software that I wrote that's based in Excel um, helps me solve that, answer that question for people. So it's that's how I got in this space. I'm not 100% sure if I'm always glad I'm in this space. Uh, well, it's the interesting thing is most real estate agents, not like you, but most real estate agents don't get it, don't want to get it, don't care about getting it. Most builders don't get it, don't want to get it. Um, most homeowners get it.
Mm-hmm.
Um, every homeowner that I show that I can show them how to save $500 a month, get it.
Yeah.
Um, and I showed a guy on a beach house, not too terribly far from where I am today, on a $1.4 million house, how he could save $1,700 a month without
Wow.
spending one more penny. And he was like, "Are you nuts?" And I go, "Yes, I am nuts, but the numbers are real."
Yeah.
So it's been a long road to get people to open their eyes to it. But
Yeah.
as interest rates have gone up, people have started to be
Mm-hmm.
interested more.
Yeah.
So
Absolutely.
that's
Yeah.
what I do.
So is it fair for me to say that the programs that you have, the platforms, have a capacity to reward the home buyers who are looking to buy high performing homes,
Absolutely,
right?
absolutely,
That
it is.
I mean,
Yeah.
like, what's taking you so long? Like, I know you've been working on it for a
Well,
long
it's
time.
it, what's taken me so long, and this is my mistake because I'm not a software engineer, right?
Oh,
I'm a
mm-hmm.
number cruncher. I'm a math guy,
Yeah.
right? And software engineers, I believe, go into a program with no preconceived notions. That's what
Mm-hmm.
I believe, right?
Right.
I didn't.
Mm.
Once I got into this, because I was looking at it from a total cost of ownership perspective, 100% focused on total cost of ownership, I
Mm-hmm.
kind of missed a few things.
Mm.
And one of the things that I missed that has turned out to be critical is I could wave my flag saying TCO all the way, right?
Mm.
If the consumer didn't get it, I didn't care. I just kept waving my flag.
Mm-hmm.
And that was a mistake.
Mm.
Because the consumer, maybe they understand TCO, maybe they don't. They all understand interest rate.
Mm-hmm.
And so I was focused on, yeah, I know the house costs more, and yeah, I know the interest rate's higher, but it's cheaper. Well, people looked at me like I had 3 eyeballs. They said, "What, are you crazy?"
Yeah.
Um, and so I changed the program in March of this year. I had what I call a Damascus Road experience. And basically I said, if I change a few things in the program, I can still get the same result. I can still get a
Mm.
lower TCO, right? Because
Mhm.
I'm pure to that.
Mhm.
But I've also tweaked it to where now I can give the consumer something that they easily identify with, and that's a lower interest rate. Um,
Mhm.
so why is it taking so long? Partly my own stubbornness. Um, but that's okay. But also it's something
No.
new. It's
Yeah.
dramatically different than what people think
I do believe in divine timing, Carrie. So I think
about.
all the
Thanks.
efforts that you have been putting in is finally kind of coming together. And the fact that the interest rate is, historically high right now. So
Correct.
people are more interested, because like 2 years ago when the interest rate was hanging around at 3%, it just didn't matter. Like,
Nobody cared.
right. So now is a critical time. So if maybe you can explain to me or explain to my audience, like how does a TCO, total cost of ownership, work? What does that mean? And then I know that led you to home bucks. So
Right.
perhaps you can
Well, so
explain
what
to.
is it? How does it work? Um,
Mm-hmm.
it's I will do my best not to blow your mind because how it works is crazy.
Mm,
But the long and the short of it, basically what happens is on any given day,
mm-hmm.
if one of your home buyer clients calls a mortgage lender, a mortgage broker, whoever they call, and they want a mortgage loan, that mortgage lender has, let's say somebody has a 750 credit score and they wanted a 30-year fixed rate loan for 500,000 bucks. Let's just say that's who they were.
Mm-hmm.
That lender has about 20 different options on how that loan could be structured.
Mm-hmm.
Most people want the lowest rate. It's
Mm-hmm.
real simple. They
Sure.
want the lowest rate.
Sure.
Um, and most people don't want to pay a whole lot of points. As rates have gone up,
Mm-hmm.
people have started paying more points, but as a rule,
Mm-hmm.
they don't want that.
Mm-hmm.
And so they look at that and they go, what's the lowest points? What's the lowest rate? Boom, here's your deal. This is what you get. And the people are perfectly happy, and the lender's happy, and you're happy, and your deal closes, and everybody lives happily ever after. The challenge with that is when I wrote this piece of software, literally there are about 9 trillion ways that you could do that differently than look at 20 things. 9 trillion, it's nuts, right?
Yeah.
And nobody needs to look at 9 trillion, don't get me
Right.
wrong, right?
Mm-hmm.
But in about a half a second, I can show somebody one that's better than just going for the lowest one right off the page,
Mm-hmm.
because there's a lot more that goes into it.
Mm-hmm.
For instance, if you that scenario I just painted the picture for you on, it ignores the energy performance of the house.
Right.
It ignores the indoor air quality of the house. It ignores that somebody wants to spend $500 or $5,000 on the kitchen. It ignores that it needs a new roof. It ignores, if they're putting down less than 20%, how the mortgage insurance is structured.
Mm-hmm.
Mortgage insurance can be written about 250 ways for this 750 purchaser, 750
Mm-hmm.
credit score purchaser.
Mm-hmm.
Um, 94% of it's written one way. It can be
Mm.
written 250 ways about. Um, and so my software looks at every different iteration that there could be.
Mm-hmm.
And so it gives us a solution that is, I will say always, but I'm not going to say always, almost always
Mm-hmm.
superior.
Mm-hmm.
So every bit of this I have done over the first 24 years of my career on a legal pad.
I see.
Um, but I've never done 9 trillion, right? For different scenarios. But
Mm-hmm.
the software basically replaces a lender having to do 9 trillion calculations or just one calculation if that's what they choose to do on a legal pad. And now I have a very fast idiot that sits right next to me, and it helps me calculate these things, and I end up with a better solution. And it's just that simple. It's more data, more variables, with the same goal being the lowest interest rate and the lowest total cost of ownership.
So how do you input the data such as the air quality and efficiency and
Well,
and roof and things
I
like
make
that?
some I make some assumptions.
Mm-hmm.
I look at the I told you I was working on it. I haven't quite finished that partnership yet with a company that has an AI tool that looks
Mm.
at how homes should perform.
Mm-hmm.
And so if you have a home that was built in California in the year 2020,
Mm-hmm.
it had to meet certain energy codes.
Mm-hmm.
And so you plug in some assumptions based on what is made, but then you always get an energy audit or some type of verification of it.
Right.
I can make a swag, and a lot of people don't know what swags are,
Mm-hmm. I
but
don't.
scientific wild ass guess. All right,
Okay.
it's an engineering term, but the whole point is you can make some assumptions,
Mm-hmm.
and you can say, okay, based off these assumptions, here's where we are. But then we're going to come back and we're going to verify. And we're going to say, okay, if I estimate that the utility expenses of a property are $400 a month, and we get data that says they're $480 a month, we change the numbers.
Mm-hmm.
If we estimate that a house has, if we go that far where a homeowner is concerned about indoor air quality, and
Mm-hmm.
it's interesting, I had a conversation with a agent. I don't think it was you, but it was another agent in California. It might have been you.
Mm-hmm.
That had a client that was concerned about indoor air quality associated with the fires that y'all have
Right.
in California.
Right.
And it was a big deal. This particular client, homeowner, I think their house was superior, was built superior to what code was as far as, and they didn't have to leave because of the smoke one time when the fires were coming.
Right.
Their house wasn't under threat of burning, but there was
Right.
still smoke everywhere.
Right. Right.
And that's a big deal.
Mm-hmm.
Having to relocate your family and your pets and your house plants and all that other
Sure.
fun stuff.
Sure.
Smoke. I don't live in an area where we have forest fires,
Mm-hmm.
or wildfires or whatever the right term is for it. But we have big time humidity issues in the South,
Mm-hmm. Mm-hmm.
and humidity issues called mold,
Right.
and mold causes all kinds of problems. So
Sure.
indoor air quality is a big deal, and so
Mm-hmm.
we encourage people to take a look at that. We don't make assumptions on that unless we have data,
Mm.
and because air sealing, which improves indoor air quality, and then there's some mechanical stuff you can do with the HVAC, um, is actually a pretty low hanging fruit. It's actually
Mm-hmm.
not outrageously difficult or real expensive to fix, but
Mm-hmm.
it's not a number one thing on somebody's list until you mention the terrible word asthma. And you
Mm-hmm.
say asthma, everybody knows somebody that has asthma.
Yeah.
And when you say, I have a daughter, I may have shared with you, I have a daughter who has a 6-year-old and a 3-year-old, and she's heard me talk about this for a number of years.
Mm-hmm.
And when they were renovating an older home that they bought, she called me up just out of the blue one day and said, "Tell me about that whole indoor air quality thing." And it clicks, especially with
Mm-hmm.
the mamas.
Yes,
The
exactly.
mama bears are worried about the little babies, and so obviously you say asthma, but anyway, so that's what we do is we try to find out as much information as we can and
Mm-hmm.
give the consumer,
Mm-hmm.
the home buyer, the information they need to make the right decision.
Right. So does your program help the buyers of an existing home to improve their newly acquiring home to be more energy efficient, more sustainable, more disaster resilient, and that's considered taken into account of your mortgage underwriting process.
Absolutely. Yeah, absolutely. And
So yeah,
that's the coolest thing about it.
right.
So yes, to answer your question, identifying what the particular challenges with a house
Mm-hmm.
is the most critical piece.
Mm-hmm.
Finding the financing to fund it is the simplest piece,
Mm-hmm.
because there are renovation type financing that goes from $100,000 houses, which I know don't exist in your market,
Right.
um, to multi-million-dollar houses.
Right.
I did a $3.2 million passive house in California. I
Mm-hmm.
mean, up in the Bay Area, up out. I
Mm-hmm.
think it was actually. It was in Saint Helena. I think is
Mm-hmm.
what it was.
It's
It was
up
one of the
north,
areas where
yes.
they where they
Mm-hmm.
where they had the campfires. What I think what they called it,
Yes. Yes.
where that whole city
Mm-hmm.
disappeared.
Right.
I can't remember the name of the city, but these people went in and bought a
That was
lot.
right.
Yeah,
Paradise.
Paradise. That's exactly what it
Mm-hmm.
was. They
Mm-hmm.
bought a lot outside of Paradise, and it was in Sonoma County, as a matter of fact.
Mm-hmm.
I remember.
Mm-hmm.
And they bought a lot and built a $3.2 million passive house.
Oh, see.
And they kind of start over. So the good thing that came out of that is the homes that are now being built there, even though they're quite expensive,
Mm-hmm.
um, they're far superior.
So,
Um,
so you provided the loan for this new construction for this new owner? Is that
yes, ma'am. Yes, ma'am.
okay? And how did that look like compared to, you know, mortgage products out there?
Well, there was when they called me, and
Mm-hmm.
typically when unless I have a relationship with somebody like you,
Mm-hmm.
typically I get a phone call when there's a problem, right?
Right.
This lender is an idiot. They don't know how to spell green, or whatever. The appraiser doesn't know what they're doing, or
Right.
whatever, right?
Mm-hmm.
And usually it turns out that it's partly a high performance problem and partly a real estate problem. Right?
Yeah.
So, but in this particular case, with the people in California up in Sonoma County, they had gotten their architect, who was in San Francisco, I believe, said, we're getting up in the numbers. I think maybe you should get an appraisal just to make sure you're going to get done what you want to get done. They
Mm.
got an appraisal done. It was like $2 million. They were going to be like, they spent like 400,000 for the lot, and they were like 2.2 for the house. So they were going to be 2.6 in this thing, and they got,
Mm.
they were not happy about that. They were going to do it anyway, but they weren't happy about it. And so we got all the information. We reached out to about 15 different appraisers. We found two that were competent to do the job.
Mm-hmm.
We got two appraisals, one at 2.8 and one at 3.2. And that's not because I'm a genius. That's no, it's not. So go, oh, you the man. I go, okay, well, I am the man, but that's not the point. The point is that we communicated to the appraisers the right information so they could
Right.
make the right calculations.
Right.
Because at the end of the day, an appraiser, and all real estate agents know this, they may not admit it, but they know it. All appraisers want to give a report to an underwriter where they're not going to ask them 10,000 questions.
Right.
And that's the way it worked out. So we had two appraisals. They were fine. Everybody was happy.
Mm-hmm.
Um, but yes, we did. We did the new construction financing for them.
So the information that you provided was the fact that this was going to be passive house, and you had to provide all the different
It was a, it
factors
was
of
a, it
passive
was,
house.
it was a book. It was, I
Mm.
mean, it literally, we had to open a Dropbox account just for that account. It was 200 megabytes of data. I mean, it was
Sure.
crazy,
Sure.
you know.
Yeah.
And but the whole once again, and then we had a lot of appraisers that came back to us and said, "Oh, I've always wanted to do a passive house. I'd love to do this." I'm
Mm-hmm.
kind of going, we're not really into work, on the job training here. At least
Yeah.
I love training people, but
Yeah.
the whole point is I need somebody who's competent to do this. I mean, this was going to be an $1,000 appraisal. I mean, we
Mm-hmm.
needed somebody who knew what they were doing, right?
Mm-hmm.
And
Mm-hmm.
and the two people that did the appraisals were competent. They knew that. It was interesting to me that their numbers came back $400,000 apart, but
Right.
it's okay.
So was this a purchase loan that you did for this passive house, or was that a construction loan?
It was a construction loan.
Construction loan. So,
Yes, ma'am.
so because of the fact that this was going to be a passive house, did it, did, were you able to give them a lower interest rate or,
Well, in their particular case, the part where the HomeBuck software shines like crazy,
mm-hmm,
is by taking all is when we're looking at a house and we're going to make it better.
mm-hmm,
And in this particular case, these people had everything already identified. I mean, they had
mm-hmm,
buttoned up, they had like, I mean, I said, I need these 25 things,
right.
and I had them in 3 minutes. I mean, they knew
Mm-hmm.
what they were doing. And so
25 things like what, Carrie? What are the things that you have on the
they
list?
they had a takeout from a HERS on what the house how it's going to
Mm,
perform.
mm-hmm,
They had solar and
mm-hmm,
battery from
mm-hmm,
Tesla. They had all the
mm-hmm,
contracts. They had all the
mm-hmm,
specs on it.
mm-hmm.
Obviously, we had the architectural plans. We had the
Sure.
cost breakdowns. We
I
had the
see.
contract. I mean, and 25 may have been an exaggeration,
I see.
but
Yeah.
the point was they had everything buttoned up.
Already. Yeah.
and
Right.
and and the way I look at it is, if you're going to build a house that's expensive in the marketplace because of high performance,
Mm-hmm.
you better button it up. You can't
Mm-hmm.
just say, well, it's $100,000 for the HVAC. What's your problem? Well, I
Mm-hmm.
got a lot of problems. So,
Mm-hmm.
so they buttoned up every single piece of it. They had the windows came from Germany and they cost 300 grand, and
Mm-hmm.
they had all the specs. There was no mystery when the appraisers did their work.
Right. So let's take that case of the recent listing that I worked that I was
Okay.
getting your help with. So this home was already certified. So it
Right.
was already a high performance home,
Yes, ma'am.
and but it didn't have solar panels and or a storage, but they had all the other elements of heat pumps and high performing um, HVAC system and appliances and whatnot. And what you provided me for the possible mortgage, even though we ended up selling for all cash buyer, the scenarios that you provided for me was that if any buyer came in with any conventional loan, the interest rate was hanging over like mid seven, and you were saying if we use a TCO mortgage, the because this is already a high performing home, certified high performing home, you were able to get a little bit lower rate. And the last scenario you provided was if a buyer came along, bought this already high performing home, and decide to include the installation of solar panels and the power storage, you were able to provide even like it was almost, I think it was almost 2 points lower than the conventional.
I think it was a little more than 1 point, if my memory serves me
Yeah,
right. I think it was one and
yeah,
3/8 or something like that. But it
right,
was it
right.
was substantial, and this was part of the epiphany that I had earlier this year.
Mm-hmm.
I went to a solar conference begrudgingly. A buddy of mine in Dallas, Texas, who's a big solar guy. He's a real estate agent with Remax.
Mm-hmm.
And he said, "Hey, let's go to this conference." I said, "I don't want to go hang out with a bunch of crazy solar people." And most of them were crazy solar people. I mean, they were, right?
Mm-hmm.
But they were good people. There was nothing wrong
Mm-hmm.
with them. I mean, they were fine
Yeah.
people, but they were a little wild and crazy, and that's fine. And I talked to probably, if there were 10,000 people there, maybe there were, I don't know. But there was a handful of people there. And I talked to probably 5 or 6 people who were kind of on the business side of solar.
Mm-hmm.
And they enlightened me to the fact that, unbeknownst to me, there's about 100 different ways you can finance solar.
Yeah.
Um, so I took those 100 ways, plugged them into my software, and I came up with a solution that allowed me to do what I shared with you.
Mm-hmm.
So basically, we provided a customer, and as a matter of fact, I'm about to go present this to a builder that does 4,000 houses a year, doesn't know how to spell the word solar. Um, and we're going to show him how he can deliver a lower total cost of ownership for his customers, which he doesn't care, right? It
Mm-hmm.
doesn't matter, doesn't mean anything to him,
Mm-hmm.
right? But the part that he does care about is right now his homes are in the 400,000 to 500,000 range. They're in the southeastern United States, so they're not
Mm-hmm.
the more expensive homes like in California or New York or
Mm-hmm.
whatever.
Mm-hmm.
And But right now he's paying 2% approximately of the loan amount of the purchase price to subsidize the interest rate for his customers, right? So
Interesting.
$500,000 house, that's $10,000, right?
Mm-hmm.
I believe, and I haven't seen all his numbers yet, but I believe we're going to be able to, by doing solar, relieve him of that $10,000 expense.
Mm-hmm.
Well, if you're a builder and this guy builds 1,000 houses a year, I said it wrong. There's another builder, but this particular one we're talking about is 1,000 houses a year. And he has 3 projects that he's working on that will be $10,000 over the 10,000 houses over the next 5 or 6 years. $10,000, 10,000 homes, excuse me, $10,000 a house, 10,000 homes. It doesn't take a genius to figure out that that's got a lot of zeros on it. And so you sit there and you go, okay, so the customer ends up with a lower total cost of ownership. Um, and the builder ends up with a better value proposition for his or
Mm-hmm.
her business. And the
Mm-hmm.
consumer still wins.
Right.
Um, And so, like I said, so whether somebody, and this is the part that's super important, whether somebody is predisposed to think about the planet or predisposed to think green or predisposed to be have a sustainable mindset like you do, um, we still can help them. And the funniest part about it is when I share this with old, short, fat white guys like me, who are not predisposed to think about green, they all of a sudden get really interested in, can we talk about that solar thing again?
Mm-hmm.
So you got to get people where they are. I don't bang people in the head with a solar panel. I just show them what's attractive to them, and that's what I learned this year was maybe it's not important what I tell them, maybe it's important what they want to hear, and so that's what we.
And because by adding the solar panels on the roof, the, as you said, total cost of ownership, meaning mortgage payment plus the utility cost
Yep,
would would be less,
correct,
right? And
correct.
so
That's
so your mortgage can provide
that's right.
that.
And the part that's crazy.
Mm-hmm.
And I had a meeting with a guy yesterday. Yeah, it was yesterday. And sometimes it's hard for people to say, okay, so I've got a house, your house, the one that in Sherman Oaks that we talked
Mm-hmm.
about,
Mm-hmm.
because it was already a certified energy efficient house. We estimated that the utility expenses were only going to be $200 a month,
Mm-hmm.
right? So
Mm-hmm.
which is pretty affordable in that market, from my understanding, from what you
Mm-hmm.
told me.
Yes.
Um, and to sit there and to say, okay, well, if you did this traditionally, and you said, okay, I'm going to buy this house, I'm going to pay 7.5% interest, my payments could be a gazillion dollars, all right, and my utility bill is going to be $200 a month. Okay, if you put solar in my house, you can only save me $200 a month, right? There's only
Mm-hmm.
200 bucks.
Mm-hmm.
Well, when you do it the way the HomeBuck software does it, I think that we came back with like $800 or $900 a month, and
Mm-hmm.
that we were saving the consumer, and the consumer's going, "What? How can
Mm-hmm.
you save? It's only $200." Well, the point is that's what happens when you build it all together. That's
Right.
the power of doing it holistically,
Right.
instead of saying, "Yeah, we're going to do the solar," because you can bolt solar onto any house you want to, and you can
Right.
eliminate a whole lot of the energy bill. But if you look at it holistically, you can really save some money.
Right. So what's the exciting new feature that you have been telling me
It's
about? And
it's
that's
totally
part of the home box, right? Like
it
so
is it is. I was working on this, and you're the very first person on the planet that's going to hear about it, right?
yay. I'm so
Yeah, it is totally
privileged.
it's totally cool. I'm going to put it on LinkedIn tomorrow, so you're getting it
Mm-hmm.
before anything gets it.
Yeah.
Um, the I always try, because I update my software all the time. The problem with my software is it lives on my Mac, and it's in Excel.
Mm-hmm.
The opportunity with my software is software engineer is going to put it using, they tell me it's a program called Python, I think is what it's called. I'm not an IT guy, so I don't know. And it will be like a web application, and it'll be super powerful. Everybody can use it on their phones and all that stuff, which will be awesome, right?
Right.
But the problem is I change this software, if not every day, every other day,
Yeah.
right? I constantly tinkering with it. But what the addition I'm adding to the software is called HomeBucks VIP. What the HomeBucks VIP thing allows me to do is, today, if somebody applies for a mortgage loan, one of your clients applies for a mortgage loan, they give the lender, broker, whoever they are, they fill out a loan application, they let them get a credit report, whatever. They give them some stuff so they can give them a number. And either immediately or the next day or whatever, they give them some mortgage numbers, right?
Mm-hmm.
They say, here it is. You get 7.5%, you pay 1 point, have a nice day, right? And then y'all close and everybody lives happily ever after. Well, what HomeBucks VIP does is it shows the customer all the inputs that we could put into it so they can decide which interest rate they want. So
Mm.
instead of me saying you get 7.5 with 1 point, I can show them, okay, if we add solar to your house, we can drop your interest rate to 6.5 and drop your utility expense. Well, I really want a kitchen added to it. Okay, well, the kitchen's going to cost 40 grand, let's say. I don't know. Let's say it's
Mm-hmm.
40 grand.
Mm-hmm. Mm-hmm.
And that's going to add something to it. So like I said, so we just work through that process instead of me being the all-knowing, lender who knows everything in the whole world. Um, I'll admit that I don't know what the customer always wants, right?
Mm-hmm.
I may know
Mm-hmm.
what they're going to qualify for, but I may not know what they always want. So I asked. I just said, let's just ask.
Mm-hmm.
And so that's what Homebucks VIP is going to do. Is it's going to give the consumer the ability. We will do a Zoom call with every one of the customers after we've done the financial analysis piece that we do with everybody.
Mm-hmm.
And then I'm just going to show them, here are the different options you have available. How would you
Mm-hmm.
like to structure your deal? And
Mm-hmm.
no other lender on the planet does it because nobody has the TCO software. And so that's what it's going to do.
Right. So that's gonna include, like, say, for hypothetically, if I have a buyer who is looking at this home that's gonna need new insulation or replace windows or new kitchen or bathrooms, and all these things can be all included.
Yep. Yep. Absolutely. And so what we do is we just kind of walk through, and instead of, because
Mm-hmm.
as a successful real estate agent, people will find houses and they say, I love this house, but,
Mm-hmm.
well, we're going to ask them what the but is.
Right.
And we're going to say, now let's figure out, if we included solving that challenge,
Mm-hmm.
how does that impact your total cost of ownership? How does that impact
Mm-hmm.
the performance? And
Mm-hmm.
what I like to jokingly say is, people love having homes that are high performance. Everybody, all the surveys say everybody does. Nobody
Sure.
wants, hey, do you want a house that stinks at energy efficiency and the indoor air is garbage? Do you want that? No, nobody
Yeah.
wants that.
Yeah.
But the part that people miss is that somebody wants some granite, and somebody wants some stainless steel appliances, and somebody wants hardwood floors, and somebody wants a retaining wall in the backyard so the backyard's flat so the kids can play. There's a lot of other stuff people want other than just green stuff.
Mm-hmm.
And so what we try to do is we try to paint a picture, because the cheapest way you're ever going to finance anything is with a first mortgage. It's always the cheapest.
Mm-hmm.
And so while we're at it, let's just figure out what we can do on the front end of it, and let's add it to the picture. Let's make it part of the conversation.
Mm-hmm. Mm-hmm.
And so that's what we're going to do is we're going to show the consumer, okay, this is a great house. It checks the things you can't change.
Mm-hmm.
Location, you can't
Mm-hmm.
change the location. You can't change the school district. You
Right.
can't change the commute to work or whatever. The other things that are
Yeah.
mostly location oriented,
Yeah.
but you can just about change everything else.
Mm-hmm. Mm-hmm.
And so that's what we do is we're going to give the consumer the option to take a great house and make it an
Mm-hmm.
amazing house.
Right.
Um,
With the first mortgage.
absolutely.
Right.
Or
So,
in some cases, sometimes there might be an equity line behind the first mortgage or something, but in most
okay,
cases, it's always going to be the first mortgage. Yes.
I see. So, so, so it's somewhat similar to some of the what we call green financing that have been around for some time, but the ones that we're talking about, the Freddie Mac, Fannie Mae, and um, I'm sorry, I'm
FHA.
just
FHA.
FHA. They all have some kind of a green financing programs, but it's much more than that. Sounds
Well,
like.
it takes every one of those programs. And
Mm-hmm.
see, here's the problem with those products you just mentioned.
Mm-hmm.
The products you just mentioned is they were all developed in a room in Washington, D.C. with people that maybe didn't ever use them. And I'm not saying these are bad people. I'm just saying
Yeah.
they're inexperienced
Yes.
people.
Yes.
And so what we do is we take those products. A
Mm-hmm.
lot of people in the energy efficiency space say, "Oh, I want you to use energy efficient mortgage, or I want you to use the home style mortgage, or I
Yeah.
want you to use the Freddie Mac's is called Green Choice. I want you to use that
Yeah.
product."
Yeah.
And I go, "Okay, well, there's one that's 150 times better,
Yeah.
and we're going to get the same thing done." And they go,
Yeah.
"What are you talking about?" And I and so that's the piece of 38 years of reading guidelines, which what makes most
Mm-hmm.
people's eyes pop out of their heads.
Mm-hmm.
But that's the piece of it, because it's not necessarily the product, it's
Right.
the execution. As I told you, I really like
Yes.
brisket. And with brisket, you can take the same piece of meat and give it to two people that are going to cook barbecue, right?
Mm-hmm.
And you can put them on the same grills, and you use the same kind of wood, charcoal, whatever it is, and
Mm-hmm.
end up with a totally different product at
Mm-hmm.
the end.
Mm-hmm.
Barbecue, it's not about the meat and the wood and all that stuff, it's the technique.
Mm-hmm.
TCO is about the technique. Home
Mm-hmm.
Bucks is about the technique. How do we get there? And so that's what we're doing. Is we're giving customers something that is one step above what they're getting from the standard mortgage lender today. Not that they're
Right.
bad people, they're great people. We just look at it differently.
So are the lenders going to be involved in the renovation process of construction and permitting? I mean,
The only reason in
mm-hmm,
a perfect world,
mm-hmm,
the consumer has enough of a down payment that the renovation financing is funded out of their back pocket, and you don't have to mess with the lender. That's the
mm-hmm,
perfect world, right?
mm-hmm,
99% of them are not perfect, right?
mm-hmm,
So,
mm-hmm,
but to answer your question, we set up a draw schedule
mm-hmm,
on the improvements that are going to be done. We get an appraisal based on the improvements being done,
mm-hmm, mm-hmm,
and we go from there. In your particular case with the home in Sherman Oaks,
mm-hmm.
because we anticipated that the buyers were not going to be doing a 10% down payment or a 20% down payment.
Right,
We were going to put down a substantial down payment. We weren't as focused on what is the home worth after the improvements are completed.
right.
But I had a deal in the Orlando area. I mean, excuse me,
Mm-hmm,
the Oakland area. Excuse me.
mm-hmm.
Um, and interesting, the deal fell apart because it was a high risk fire area,
Oh, wow.
and they couldn't get insurance, which completely blew my mind. Um,
Mm.
so I said, well, what if we improve the home so it's fire resistant?
That is so interesting. I have a letter from California Fair Plan
Okay.
uh, on my desk that is
Okay.
now finally saying that they are going to give you a break on the premium if you do some of the hardening
Well,
of
see,
the fire
and
risk.
I didn't know that term, so you just taught
Mm-hmm.
me something. But the
Yeah.
whole point is, in where my beach house is in Florida, right?
Mm-hmm.
The most recent hurricane hit about 60 miles east of here.
Yeah.
And obviously that's a terrible thing, and some of the people are renovating, some people's houses are gone, whatever. But I was talking with some of the real estate agents, and we in Florida we have a huge insurance problem because of storms, right?
Mm-hmm.
Y'all have a
Mm-hmm.
huge insurance problem because of fires,
Yeah.
right?
An
And so,
earthquake.
well, yeah, but I don't know that you can. I mean, I don't know that you can take an existing home and make it earthquake proof. I don't know. I mean,
Yeah. Well,
I don't know.
that's a debatable topic. I
Yeah.
think I need to have
Okay.
a whole different
Yeah.
episode.
Get an engineer on the phone, right?
Yeah.
But anyway, but the whole point is, but there are things that you can do. The loan products that we're talking about that will do the
Mm-hmm.
kitchen and the energy
Mm-hmm.
efficient stuff will also do resiliency stuff.
Yeah.
And so if resiliency means a metal roof that won't
Mm-hmm.
burn, or if
Mm-hmm.
it means hardy plank siding that's made out of concrete
Mm-hmm.
versus cedar shakes and wood,
Right.
um, that should, in my opinion, being a very simple man,
Mm-hmm.
that should have an impact on the insurance costs. I think it
Yeah.
would.
Yeah.
And so to me, that's something that it's on my list
Mm-hmm.
of, how can we look at a house where, because there's a housing shortage and
Mm-hmm.
because there's, housing is expensive in California specifically, if people aren't able to buy a house because of the fire risk rating,
Mm-hmm.
maybe we should make the house less fire susceptible.
Exactly.
So that's on my list. It's to
Yeah.
talk to somebody in the insurance business and say, "What if?"
I would be phenomenal. That would be phenomenal,
Well, good.
for you to be
I'll wear you out about it. I
oh
will wear you
yes.
out about it. Yes,
Yes, please. Yes,
because
please.
if we can do that, because that's not only a get a real estate deal done driven,
Mm-hmm.
but it's
Mm-hmm.
also an affordability thing. Because
Yeah.
if insurance is $10,000 a year because it's high risk, and you can drop it down to $3,000 a year,
Mm-hmm.
that's $7,000 a year is $500. That's like,
That's
almost
significant.
100,000. That's a lot of money.
That's
It's
significant.
yeah, it is. What a
Yes.
great way to put it. Yes,
Yes. I would send you a copy of this letter. It tells
please
you
do.
all the things that you can do in order to get discounts on the fire
Well,
insurance
that's great.
premium.
That's absolutely great.
But
Super.
anyways, so how can people utilize the mortgage that you are
The
offering?
best way to do it is to shoot me an email or text me.
Mm-hmm.
What I the best way to reach me on my email is Kerry at thehomebuckscompany.com, or they
The
can send it the home home bucks bucks company.com, or they can go simple, which is my prime lending email, which is kerry.langley at primelending.com.
mm-hmm.
Or the simplest way is they can text me, and which is my cell phone number. I'll be happy to give it to people if they like. It's
Mm-hmm.
770-365-7769. I would recommend they tell me I'm in Eastern time zone. Only one real estate agent on the planet gets to talk to me at midnight. No names included here.
No name included.
Yeah, no names included. But seriously,
Thank you.
the best thing is, if I work all the time, and this is my passion.
Mm-hmm.
So if somebody has an interest, shoot me an email, text me, carrier pigeon, smoke signals. I don't care. I just want to hear.
So can I say that can I tell my buyer clients that if they want to buy a high performing home or make an existing home more higher performance, and if they want to even include this solar panels, talk to Kerry so that he
Yes.
can give you better interest
Yeah.
rate.
Absolutely. You're yes, ma'am, you can. You most certainly can.
Mm-hmm.
The great thing about the company I work for, Prime Lending,
Mm-hmm.
is when I went to work for them, I told them what my passion was.
Mm-hmm.
And they all looked at me like I was nuts, like everybody does, right?
Mm-hmm.
And they couldn't spell the word green either, which is fine, right? But what they told me, they said, here are the 29 products. We literally have 29 products that will allow us to do these type of things.
Mm-hmm.
They said, you can do these anywhere in the country. So go do this. So
Yay.
they didn't buy, they bought into it enough where they believed that I was trying to save the world, and I am.
Mm-hmm.
And so they gave me the green door to do that. I mean, they opened the door for me, and I was happy about that. So
Well, I can't wait to send some buyers to you, Carrie, and
thank you.
you know,
You're,
get this
you're
going.
very
It's
kind. You're very kind.
Thank you so much. Thank you so much. This was Izumi Tanaka with Home Green Homes podcast.